You're listening to the Decidedly podcast with Sanger Smith and Sean Smith. Our mission is to help business owners like you defeat bad decision making so you can improve your health, wealth, and relationships. We do this by digging deep into the stories and expertise of our guests and distilling their knowledge into actionable wisdom for you to carry into your life and business. If you're new to the show, welcome. Be sure to hit the subscribe button so you won't miss out on any of our weekly episodes. If you prefer to watch this week's episode, head on over to YouTube for the full video. Now, let's get into this week's episode and defeat bad decision making in your life and business.
I need to get the commitment award for Decidedly podcast.
Oh yeah, you were rushing in today.
I showed up like 2 minutes before we went on air. I had to take a flight at 5:30 this morning.
5:30?
Yeah, which meant I got up at like 4.
Yeah.
It was brutal. But there you go. But that's my commitment to this show, to do that kind of business.
So I got to one up you.
Oh, damn it.
Yeah,
I can't even have any glory at all for this.
So yesterday I was in Colorado, or Saturday I was there yesterday as well, but Saturday night I get an email. I had a flight that was supposed to land in Fort Worth at 10 p.m.
Yeah.
I got a weather advisory. I'm like, well, I can't get delayed. If I get delayed, I got to miss the show. So I rescheduled the flight. You know what? The only thing available was 6 a.m. So I was an hour from the airport. You got to get there 2 hours early to return the rental car. I had to wake up at like 2:45.
You're always
so eat it.
You're always looking at ways to one up me.
Yeah,
I can never have my moment of glory.
You know what? I won't one up you on is knowledge of fraud. And our guest today, Dr. Kelly Richmond Pope, is a nationally recognized expert in risk, forensic accounting, and white-collar crime research. Today, we dove into the most impactful ways to protect your business against financial fraud with super strategic operational strategies and culture within your company. So listen to our conversation with Kelly. She is a wizard. She's super knowledgeable. She has some fascinating stories that I learned a lot from. And you'll learn a lot about the risks of fraud, but also how to protect yourself and your company and kind of why these things happen. So it should be really entertaining. I know you're going to learn something. Stick around, have a good time. I'm Sanger Smith. I'm with my dad, Sean Smith, and this is Decidedly.
Where were you born, Kelly? Where'd you grow up?
And I grew up, where I was born and where I grew up are two different places. So which one do you really want?
Well, where'd you grow up?
Durham, North Carolina.
Were there a lot of people wanting to go into forensic accounting when you were growing up?
No, it really wasn't a field then.
So how did you get interested in that?
Well, I think we're all interested in it. We just don't know that we don't necessarily have a degree in it, because we're all interested in how to protect ourselves from scams and fraud. So I think we're all interested in it. I just started to make it, I guess, an addiction when I was earning my PhD at Virginia Tech. And you have to pick a research area when you're a PhD student. And my research area originally was around ethical reasoning and ethical decision making. But that's a really broad area because we all make ethical decisions all the time. So when I was teaching at my first university, which was at the University of North Carolina at Greensboro, I had a student who wrote a paper about forensic accounting. And actually, that was the first time that I had heard of it as a field, as a discipline. And I really liked that it was a very interdisciplinary approach to understanding the importance of a lot of fields mixed together. So the importance of accounting and auditing, psychology, criminology, sociology. And so it was this mix between, or this mashup between all these fields that I really appreciated. Plus, I think it makes the reason for understanding accounting even more strong. So that's a long answer to really say how I got interested in it. So I think we're all naturally interested in it, but then just as a scientist and a researcher, I started studying it when I was in my PhD program at Virginia Tech.
So the forensic accounting and the ethical decision making, I really want to get into, but I want to get into something before we talk about that, because I was looking at your bio and you actually produced a movie about that very topic. And so I wanted you to take me through how you got interested in that and sort of a little bit behind that story.
Well, I love stories. I love documentary filmmaking, and I felt like documentary filmmaking was a really good vehicle to use in the classroom. So that's really, I started bringing in clips and things into my accounting classroom to teach my students. And one day I had this idea where I said, I could probably make my own, direct and produce my own documentary. So those are like famous last words. And I was going around the country doing these on-camera interviews with white-collar felons, whistleblowers, and victims of fraud, really to grab these stories and turn them into these teaching cases, audio cases, or video cases that I could use in the classroom. So I already had a team in place, and I was already doing these interviews. And one day I was reading the Chicago Tribune, and the headline was, City Comptroller of Dixon, Illinois embezzles $30 million. And I was like, where in the world is Dixon? How does something like that happen? And that number grew to 53.7 million. But so I thought this would be a fascinating story, because so much what happens when fraud and scams are reported is people focus on the perpetrator, and they don't often focus enough on the environment. So I think for your listening audience, if we are victimized, we often can be so just scorned and feel violated by what that person, the perpetrator, did to us. But we don't spend enough time really talking about the environment that allowed that perpetrator to think that they could steal $53 million. And so I was really interested in directing and producing All the Queen's Horses because I wanted to take the story a little bit further. Yes, Rita Crunwell, who was the former city comptroller of Dixon, Illinois, embezzled $53.7 million. And as shocking as that is, my bigger question was, how does a person think they could do this and get away with it for such a long time? And so that, to me, was a bigger story that I wanted to focus on. And so that's what the documentary covers.
So how did she get away with it for such a long time?
Oh, it's pretty easy. She got away with it. Two things. One, people trusted her, and we all trust somebody, right? And two, nobody really likes dealing with numbers. I mean, how many times have you heard a person say, oh, I'm not a numbers person. I don't like numbers. I don't deal with that. Well, when you say that and when you feel that way, you really empower the person that does like numbers and feels comfortable with spreadsheets and finances and things like that. And so Rita was the go-to person. So it was easy for her to steal this money because she set up a secret account and just moved money from one account to the next, from a legitimate city account to her secret account, and just moved money over the years. And that was it. Really easy scam, really easy scheme, nothing hard to do, primarily because no one was looking. I mean, she was the one in charge. And, there was a lack of segregation of duties, which is what you find in a lot of small, medium, and sometimes even large organizations, because even with large organizations, the in-house accounting and internal audit function can be relatively small. So they are overseeing a lot of transactions. And so even their teams can be small. So it's pretty easy for her to do it.
So the environment where people kind of don't have any overlap of responsibility, they're segregated off in the accounting department on their own. That makes sense to how that could lead to at least the opportunity for fraud. What are the other things in an environment that kind of create, a hotbed for somebody like this to succeed with a insane scam?
Here's the thing, and here's the scary part about that is I think life is the environment. We're busy. We have multiple interests. We have multiple distractions day to day. We celebrate people, but we're also a little bit envious at the same time of other people's accomplishments. And you want everything that you see on social media for you. So I think there's a lot of things that can create the Rita Crunwells of the world. And so she was at the extreme, but they're little baby Ritas all over the place. The person that uses their corporate credit card to go on a family vacation, or even the person that takes their whole family on a work vacation and skips the whole work part and just, has a good time just hanging out with their family. Like, there's all types of ways that the Ritas of the world are created. The difference is a lot of us don't think that is fraud, but it is, just a different scale, but it is. So I think that these environments are life pressures. And that's what makes, I think, fraud so prevalent, because if you survey 100 people today, they're all going to tell you at least 2 or 3 pressures that they have. And not to say that they're going to now go and steal from their employer, but those pressures are within us all. So these environments are just, I think, our natural course of business, unfortunately.
Yeah, I agree with everything you said. That I was worried that you're going to blame it all on the environment. And I think there is a human element that's present all the time. We are fallen creatures. People are going to mess up, and it takes a rare person when they have an opportunity to, do the right thing when nobody's looking, that they actually do it.
Absolutely.
In most of these cases, I imagine that things have happened in the company or in the municipality that led that person to believe, oh, I can get away with this. I can get away with this. You're not going straight for 50 million.
No.
They're going small, and they kind of work their way up, which is the case with any malicious behavior.
I agree with you. And I think that, the human element is there. But one of the things that I don't believe, and I know that there's research out there that states this, but one of the things that I just no longer believe anymore is that there is a profile of a white collar felon. I don't necessarily believe that anymore, because I have met too many people and done way too many interviews that are outside that traditional profile. I mean, It can be anyone at any time. And it's why we have to have internal controls in place. And we check to make sure those internal controls are working on a regular basis, because it could be anyone at any time. And we don't tend to know all the pressures that people are facing and what their needs are and how they're feeling emotionally. So that's why we need those internal controls, because I do think there's not necessarily a profile of a person. And that's my personal opinion.
In the example you were giving in the movie, I guess there weren't any internal controls, and she had control over setting up these separate accounts. And somebody started asking questions. I guess she was living a pretty high life and extravagant lifestyle, and somebody started to finally ask some questions. What would be the controls that a company ought to put in place, other than not having sort of this segregated authority over financials?
Well, I'm going to say, and I'm an accountant, so I'm going to say it depends. When you say what should a company do, it really depends on the size of the company, the industry. Like, so if you're thinking about a small to medium size to small, you definitely want to make sure that the person that receives the mail is not necessarily the person that records the mail, is not the person that writes the check and that mails the check and that balances the budget. So segregation of duties is pretty important. Now, it's not so much that Dixon didn't have any. I just think they didn't have the right ones. So what happens when you have these controls is they can be circumvented. So say you have a policy where you have to have 2 signers on a check. You have to get 2 approvals. Well, if that person's not in the office you can just sort of relax that rule. Things like that happen all the time. But I think segregation of duties is a big one. I think having the Association of Certified Fraud Examiners just released I believe it was their 2026 report to the nations, where they are doing this survey on the trends of occupational fraud worldwide. And one of the interesting things that they said in their report was that organizations that did no fraud awareness training were likely to have losses 2 times more than those organizations that did fraud awareness training. And I thought that was interesting because it actually shows you that hearing about it, talking about it is very important, and it impacted the amount of losses that organizations experienced. That same report also showed that organizations that trained people on their whistleblowing policies, as you are not surprised to hear, were more likely to blow the whistle. And fraud is most of the time recognized by a employee whistleblower, not by the internal audit function, definitely not by the external audit function, but by an internal employee who blows the whistle. So I think training is definitely something that we don't think about enough, because oftentimes training is not as impactful as it needs to be. So we think, yeah, you were trained. I read the code of conduct, signed off on it, and it's fine. No, it needs to be more of a scenario-based training. What if this was the situation, what would you do? How would you respond, and why? So I think that those kinds of conversations weren't necessarily happening within Dixon, but I don't want the listeners to think that there were no internal controls. I just think the internal controls within the city weren't effective enough. And when people raise those questions, why don't we have any money, but the neighboring town that has a similar profile to us does have money? Don't let that question just sit there, because the answer to that question would have led you to Rita.
Wow. Yeah, I guess it could be something simple. You're saying a simple little amount of curiosity could cause someone to ultimately reach the end result of what's going on.
Yeah, I mean, you could say curiosity, or you could say common sense too. I mean, think about
that's probably
why does fair. How does one person own 400 horses? One person. How does that make sense?
She had 400 horses
working
as what was her official title?
City
for
comptroller.
The city?
She was city comptroller.
That's what I thought. So that's not a 400 horse salary. Okay, hold on. How long did she own 400 horses before that question got asked?
Her horse empire.
I gotta be a while, because you can't even collect 400 horses in a month.
So let's say over time, but still, let's say by year 13, she owned 300. Still, that's a lot. Yes. I have one dog. How many animals do you have? It's still a lot.
I've owned a horse. 20 horses is a lot of money.
Yeah. 400. Why does that make sense? How does that make sense? Why isn't there some couch detective somewhere in the town of Dixon? Why were they not just on top of this, asking question after question after question as to why this doesn't make sense? On top of that, if you've ever known or talked to anyone that is in the horse world, it's a very expensive thing. So to have one horse on just a regular salary is super expensive. So imagine owning 400, how expensive that was. How are you paying for it?
And I've got some clients that are in that industry, in that area, and some of those horses are a couple $100,000 easily a piece, right? So it's not just 400 plow horses.
You don't really rescue a horse for free.
No.
But I think what makes this so difficult is that many of the people who are perpetrating those types of frauds are in positions of trust already. It's not this creepy guy in a basement that everybody goes, that guy's kind of sketchy, we got to check him out. It's that person in the front office that we assume is doing the right thing. That's what makes it so hard to catch.
It's the person in the front office, the back office, the side office, it's anybody. So that is why it's hard to catch, because if you look at a picture, I think if we looked at the top fraudsters over the past, let's say, 5 years, they look like the people that you would pass walking to the office on the street. So they don't have, you're right, they're not this person sitting in a basement or in a garage with a hoodie, all the lights dark and the LED lights in the back. I mean, it's not just that person. So that's why it's a hard profile, because that's why I don't believe that there is a profile, because it's hard to say when it's anybody, how do you define that profile, which is why we have to have internal controls.
So how, like with, not just with Rita, but in general across these white collar criminals, how many of them are demonstrating fraudulent behavior in other areas of their life versus they just stumbled into a 50 million opportunity that they couldn't pass up?
So I think it's an interesting question, because I think some of the research from the ACFE also shows that most people that are ultimately convicted of white collar crime have shown at least one or two red flags that have just been ignored. So I can't give you a number or a percentage beyond saying most of them show some signs. I mean, there were tons of signs with Rita. When I think of the interviews that I've done over the years with offenders, they'll even tell you, yeah, there were tons of signs. But we are so trusting of people, and we almost feel like it's not my business to ask. It's not my business to pry. So I just sort of let it go. But there are often many red flags that just don't make sense. But we also don't feel as though we can ask about them. It's not my place, it's not my business, not my problem, but there often are many red flags around.
Those are cops coming to get you now.
Yeah. I'm in Chicago, so you hear the police outside.
So they when you say they're red flags, are those like things that are they red flags that come up before the main case, or are they red flags within the main case that kind of reveal themselves later on?
No. So they're red flags that come up even before. So when you roll back and you start talking to people and you start really going into the investigation and you start talking to people, they will say, yeah, well, I thought that was odd when that happened. So it's an afterthought. But if you can not afterthink things, you will realize that there are things that are in front of your face that you just ignore. I mean, let's look at the classic, the Bernard Madoff scandal. There were tons of red flags that it was all around everyone. And Harry Makopoulos, the whistleblower from the Madoff case, was the one that was trying to alert everybody for a very long time, and no one was listening. He was saying, these returns make absolutely no sense. They do not, they are outside of reason. And here's the paperwork to support it. No one listened to him because it was Madoff. You didn't say anything against Madoff. You trusted Madoff. So I think...
Yeah, he was president of NASD, wasn't he?
Right. So like, why would you listen to this guy over here versus this icon over here? So, but there were red flags. But, when you have a few people that are making money and they are successful, you don't want to hear that. Like, but what would you say is a reasonable return right now? Well, let's just say, like, if you invested in a company, what would you think? What would you say would be a reasonable amount of a return?
Yeah, if you, instead of like taking it in the context of this year, maybe like just average over a long period of time.
Sure.
If you're getting double digits consistently year over year over year over year, eventually I'm going to go, okay, hey,
right. So what if you said it was 20+%? That doesn't even sound, I'm like,
yeah. 20+% over the course of 10 years is just, there's no possible way.
And in a down market at that too, like you have so when everybody's down, you're up, like that. Come on, like there's just.
You're right. If it's too good to be true,
it usually is.
Yeah.
Yeah, and the earlier, so we're talking about this without saying the term, but Ponzi schemes, or multi-level marketing, or however you want to package it, it sort of all feels the same. The early people, the first in, are the first out with their money. And those few success stories is what leads all of us to run in. And then the latecomers lose their money. I mean, it happens. But there are red flags that just often just don't make sense. But I could be the winner. So let me just ignore all of that and just keep going. And that's when we end up losing. I'll give you a small example that I write about. It's one of my personal stories in the book. And I think it's in my innocent bystander chapter. And I talked about something not small for me. But my cousin and I went to a Bruno Mars concert. He was coming to the United Center in Chicago. We were so excited because we were liking Bruno Mars at the time. And my cousin said, "Oh my goodness, Kelly, I found some super great tickets for a really low cost." That should be your first red flag. You are not getting super great Bruno Mars tickets, like almost at the stage for cheap. And we bought these tickets thinking, yeah, we found a deal. And come to find out, we go to the United Center. We got our dressed up, got our makeup done, go to the United Center. They scan our tickets. Big X comes up. These were fraudulent tickets. We're devastated. Now, listen. What we wanted cheap tickets and good seats. And one of the things that one of my editors said to me, and I never forget, she said, you can't have cheap, good, and fast. You got to pick two, but you can't have all three. Cheap, good, and fast. So you aren't going to get all of those things. And so we get up there and we bought fraudulent tickets. Now, were there red flags that we should have ignored? Now that I think back, the website did look a little sketchy. But you know what? Those tickets looked good and we wanted them to be true. So we bought them, lost our money. Now, Ticketmaster helped because they felt bad and they helped us get new tickets and they were good seats. But we had to go through a whole lot to get that for that outcome. But my point being, there were red flags even in this transaction that we did not want to believe because the outcome was the outcome that we wanted. And so we didn't pay attention to. Now, you know that you are not getting great seats for cheap. It's almost like the Beyonce concert. Who's going to get almost stage seat tickets for the Renaissance tour and they're $300 for two? Like, that doesn't even sound like it makes sense.
Yeah. I guess when we're so excited and so attached to the outcome, then we can look past. It's like dating, Everybody's got a story in their life. We go like, oh,
you want to believe,
yeah, I should have known.
All those rom-com scams, like I can't even watch the rom-com movies, scam movies anymore because it's the same storyline. Because you become committed to the outcome of love, companionship. So you ignore everything. You meet someone online, you completely ignore that you've never seen this person. You have no reason to believe that this person is saying anything true. Yeah. And then you lose all your money.
I had a friend whose dad was caught up in one of those, and she told him everything. She's like, "Dad, look at this, that." He just wouldn't believe because he wanted to believe it was true.
I had a 5-hour Uber drive from San Antonio to Fort Worth one time. Long story as to why, but anyway, I get in the car and this gentleman spent about 4.5 of the 5 hours talking to me about his girlfriend. And then right at the end, I find out like she lives in China and they've never met. Oh, I was like, no way, man. No.
Right.
No.
I got some hard news for you.
You need to give me another 5 hours to talk you out of this.
Doesn't make sense. So the red flags that we are not paying attention to, right?
Yeah. What do we do when we see those? Because you talked earlier about people blowing the whistle as kind of a critical component in catching these fraudsters. Well, sometimes people don't blow the whistle. Sometimes people don't listen to the whistleblower. What has to happen in order for someone to step up, blow the whistle, and then for others to actually listen to that?
Well, I also think it depends on the severity of what we're talking about. So, if it's a safety issue and it's life or death, I think that you definitely have an obligation to utilize the internal control channels that are present and keep escalating until someone listens to you. But there's so many factors that make that question an it depends question, because you think about your personal life has to be pretty intact for you to be able to blow the whistle and to sustain what's going to happen to you once you do, because some people may be on your side, some people may not. You might experience a job loss. You might experience it's tough to get employed again. You might find that you're underemployed. So it depends on how, I think, your tenure and status within an organization, because if I've been working for somewhere 20, 30 years, I have an established retirement, I have an established rainy day fund, and I'm going to blow the whistle, and I know it's going to be some blowback, and I leave the organization and I decide I'm going to take an early retirement, I've sort of set myself up to be able to do that. But if you're a person that you are early in your career, or you need every dime because you are supporting your parents, your grandparents, you might have a business, who knows what your financial situation is, it might be easier for you to leave the organization, and hopefully your name is not associated with any of the fraudulent activity that you've seen. So it really depends on the severity, your tenure, your reporting channels. So there's so many factors. You may decide that you might want to seek legal counsel depending on the severity. So there's a lot of things I think you should think about before making that decision, because it will have an impact on your life. That's the one thing I think that's in common, that it will have an impact on your life.
I'm imagining for a lot of these people, there's not a lot of upside in whistleblowing. The guy who was the IRS whistleblower that came on the show, he was telling us about how there's a payout for people who can highlight these fraudulent cases to the IRS. But in most cases, if it's just a theft, and the IRS is uninvolved, there may not be an upside, I'm assuming, for a lot of people to blow the whistle.
So I think we're talking about two things here, because we're talking about financially, and then I think we do have to factor in emotionally and peace of mind. And so one of the things that a lot of the whistleblowers share with me that I've interviewed over the years is the sense of peace they have when they share what they know, and the sense of burden that stays on them when they don't share what they know. So I think there's a financial piece to this, and then there's an emotional piece to this. And I think depending on where you are in your life, if you are a little bit more set, and if you're close to retirement, you can weather a storm very differently than you can if you're very early in your career. So I think the financial piece and the emotional piece are very different, and so I don't want us to blend those together.
Yeah.
Because I do think that there's some differences there that you have to consider.
When for business owners who are seeing these examples, I hope people are kind of thinking, geez, I guess I am vulnerable no matter my size, no matter how many employees, no matter what's going on, because if a city government can lose 50 million, it can happen to me. If Bernie Madoff can get away with it at that level with those sophisticated investors, it can happen to me. So I think all of us, our companies are vulnerable. Personally, we're vulnerable. Nobody is just completely insulated from this type of activity. But what can we do? What can an entrepreneur do to lessen the chance or lessen the blow?
I think the biggest piece of advice I would say to entrepreneurs is, as you grow and get bigger, make sure you take the time to establish all of the necessary internal control policies that you need to put in place. Because when you're smaller, it's easy to control things. When you're a team of 10, it's very different than when you're a team of 50 or 500.
Yeah.
So I think what has to happen is, as you grow larger, as you grow out of your garage or out of, your co-working space, and you really get bigger, setting aside time to put in place an internal control policies, whether that's how you handle travel, how you handle corporate credit card spends, how you handle expense reimbursements, how you handle dinner meals. Do you have everyone list who is there? Like, it's really as we grow, because sometimes I think entrepreneurs are so in love with the idea, the vision that they created, and you see it growing and it's getting better and better and better. And then sometimes you look back and you haven't spent the time that you need to put in those administrative controls and policies that are necessary. I mean, we think about hiring. So we think about all of this when we are hiring people, but we don't always think about it when we're just on our day-to-day execution. And it is very costly to lose money as a small business owner, as an entrepreneur. So as you grow, think about what you need to put in place, whether that is utilizing QuickBooks or utilizing a bookkeeper, utilizing some type of software that is tracking your expenses. I mean, they're just things I think that we lose sight of as we get bigger. It's easier to control these things when it's just maybe you and a partner. But, you think about if you get acquired, you have to think about all of these processes that you should have in place that you might not have had as you've grown. So it's really the growth factor, I think, that makes things more critical than when you're smaller.
Yeah, you mentioned QuickBooks, and I immediately thought of Sam Bankman-Fried and the FTX scam, and they're this multi-billion-dollar company running on QuickBooks. But I guess for some people, I was shocked just in my personal life to meet business owners that for years would just write physical checks to their employees. Like, dude, you're not doing...
Rather than payroll?
You have no idea what I've seen. Yeah. No QuickBooks, no accounting software. They were like, yeah, it kind of stinks around tax time. Like, I bet it does.
Yeah. Well, so sometimes it can be as simple as just bringing in an outside person to take a look at it. I was brought in as a business coach on a company, and they had recently sold off some assets. And so I said, all right, well, let's just kind of look at the growth of the company here. And I start looking at all the income that year, plus the sale of the assets. I looked at the expenses, and then I looked at cash reserve, and it didn't add up. There was just money missing. I'm like, you should have more in your reserves than what you have. And they're like, what do you mean? I said, well, you sold these assets. Yeah. And based on income minus expenses plus sale of these assets, you should have more in reserves. And they were like, oh yeah, we need to look into it. I'm like, so it's just somebody just taking a fresh approach at looking at that. A lot of times people will try and guide you through the exact way they did it. Well, let me show you what I did. I said,
I'm going to update you just a little bit. Yeah. So when you were talking about that example, when you think about what you were saying was the accounting equation. So you think about assets have to equal your liabilities plus stockholders' equity. So it has to add up because it's an equation. So when you said revenues, expenses, and assets, are like, wait, we're talking about two different statements: income statement, balance sheet. Okay, so I had to say that.
Yeah. Correct me if I'm wrong on that.
It's the CPA in me. I'm sorry.
Yeah, I'm not gonna blow by with any BS with a forensic accounting professor from DePaul.
But you just think there is a relationship, and it's interesting that you said that, because when you think about when fraud happens, there is a relationship between your income statement and your balance sheet. There is a relationship, because once you calculate your net income from that income statement, that number has an impact on your equity section on your balance sheet. Because when you think about your equity section, you have your beginning retained earnings plus your net income minus any dividends gives you an ending retained earnings. And that retained earnings number shows up on your balance sheet. So there is a relationship. So it's interesting, because if something is missing, it throws off the whole equation. And so you have to ask yourself, if it's missing, how many things did you manipulate to make it balance in the first place? And why didn't anyone see that? So there is a relationship between these statements. They do have to talk to each other. And that's why the accounting equation works, because all of the statements are really touching that equation, and it has to make sense. And so when it doesn't, that's when you have to ask questions.
Yeah, there is no leeway for my special own way of doing it that we do at, Smith and Company over here. We like to run the numbers this way and on our special spreadsheet.
No, and I think you really have to be careful too when you have investors and you start doing things like that. Like it's a very dangerous way to operate. I think if you, as business owners, if you think of yourself operating like a publicly traded company, if you think of yourself operating like that, if you think about developing your financial statements and that you are talking to external investors or a bank, if you think about that, you will follow the correct guidance, because that to me is the highest standard that you are following. So if you think about yourself, like we have the SEC that we have to answer to. Now that's a high level of scrutiny, but if you think of yourself that way, the likelihood of you using your own creative way to do your numbers, likelihood of that happening is slimmer.
Yeah, that makes sense. If you're forcing yourself to like uphold that standard,
right?
So we have to produce an accurate quarterly report. We don't have the ability to let things get out of hand,
right,
because we haven't cleaned our books up in 3 years or something.
Right.
Oh, it is difficult. Most people don't want to do that.
I don't even want to. And
I've held people accountable to say, yeah, we're going to meet quarterly and look at all the books. They're like, they would find every reason to try and put it off or delay or say, let's do it next time.
Yeah. And that even just with the introduction of you talk about investors, Kelly, just the introduction of one business partner. And now we really cannot afford for there to be any discrepancies or disagreements. Because I can tell you, if I'm a business partner at that company that you're talking about, Sean, and I go, wait a second, our consultant saying that our cash doesn't make sense. All of a sudden, a lot of the trust that I've built up with my business partners is out the window if I don't get a correct answer in about 30 seconds.
Yeah, quickly.
Yeah.
In your research that you've done, did you find any other interesting stories that, obviously you didn't make all of them into a movie, but any others that you found interesting like that?
Oh, yeah, there are always so many interesting stories, Sean, because it's, these are, at the end of the day, they're so at the high level, we think about them as fraud schemes, but at the end of the day, these are people, and these are people that make decisions and choices. And I would argue that most of us make equally as good decisions as we make bad. And it's the bad. Some people just make bad decisions that just haunt them for the rest of their lives, or they make bad decisions that they are caught. And there's a lot of people that make a lot of bad decisions that are not caught, and they get away with it. And so there's so many interesting stories. And what I enjoyed when I was writing the book is the book is very story driven. So yes, I'm a CPA and I'm an accounting professor by training, but this is not an accounting textbook. It is a book about behaviors and how stressful situations often can cause people to make decisions that they might not normally make. There's a story in the book about a gentleman by the name of Dr. Robert Courtney. And Dr. Robert Courtney was a compound pharmacist that diluted his drugs that he was giving to doctors so that he could increase his profit margin, because he had a bill that he needed to pay with the IRS, and he had a donation that he wanted to make to his church. So he created these pressures for himself. An IRS bill could be a very daunting thing, looking, holding over your head like a black cloud, but you have to pay it. And so what he did was he diluted his the cancer drugs. And so you think about a person that's going into their oncologist for their chemo appointment, and that IV, you think it has the chemotherapy that you need, and actually it has mostly saline solution. And he did that so that he could increase his profit margin. Now, he was a very, very lax oversight, and a lot of trust is built. I mean, think about it. When you go to the pharmacist, you get a prescription filled, or you go to the doctor's office and they are performing some medical procedure on you. You don't think to ask, well, let me test to make sure the medicine is what it is. You don't think to ask your pharmacist. You go to Walgreens and they say, here's your medication. And you say, prove it to me that this is correctly what you say. There's things there's trust that's just built in to some fields that is not in others. And so he ended up, about 90,000 prescriptions he was able to tamper with, and people died. I mean, some people didn't get the proper treatment that they needed. And how would they know? How would they know? Now, the way this fraud was discovered was one of the nurses started to notice that her patients weren't experiencing the traditional chemotherapy side effects that most people have.
Oh, they weren't getting nauseous or
exactly.
anything. Yeah.
And here's the thing, Sean. It's like the reason why it wasn't picked up initially is because the doctor's response was, and this is a classic response, everybody responds to treatment differently. Just like on the back of any medication, everybody responds to drugs differently. But at this point in our lives, there is a pretty standard way most people respond to chemotherapy. You know, most people, there's going to be nausea, fatigue, hair loss. You know, there's some standard things. And so when the nurse noticed that those things weren't happening, that's when she got suspicious. On top of the fact that the tumor sizes weren't getting smaller. And so the type of cancer that they had, it should have responded to the treatment. And so this nurse got concerned and decided to take some of the bags and have them tested, send them to the FDA, and that's how the fraud was discovered.
That's one of the most sinister ones that I've heard.
Plus, he had 400 horses.
Now he didn't have any horses.
What? So I know you studied the Chicago Little League World Series team, and I had watched a video on them a few weeks ago. I remember them being such a cultural phenomenon at the time, but I had no idea that there was this fallout, the allegations, and I'm kind of a little bit unclear on what even happened.
Yeah. So the team won the Junior World Series. Mm-hmm. And what happened was the coaches had recruited kids outside of the neighborhood, the boundaries. So you had kids that were on the team that were from neighborhood that weren't from the neighborhood or the boundaries that they were supposed to be from. So imagine you're a seventh grade basketball team, but you have a high schooler on your team who happens to be like 6 feet tall, but he's been held back.
Why does this little kid have a beard?
He has a beard. So what happened? The way this came about was when the team won, there were people that were posting on social media, "Oh, he's from my neighborhood. I'm so proud of him. We're so proud of him." Well, when people were saying things like that, those neighborhoods that they were saying those kids were from were not from the neighborhoods that should have been from that team. And so the coach, one of the coaches, Chris, I can't think his last name was James, started to look into. Now, granted, Chris's team had lost to this team. So could Chris have had some bad blood because he lost? Maybe. But he felt like we lost because they cheated. That was his positioning. And so when he came forward and started asking questions, it was so interesting watching people really attack him, people really defend the team. And it was interesting because have you ever been in an argument and the actual issue of the argument is no longer the problem? Now you're talking about all these other things that have nothing to do with why the argument actually started. That was what I was witnessing that was happening here because, you know, when you looked at the facts, were they outside of the boundaries? Yes or no? Were they supposed to live in these 4 or 5, 8 neighborhoods? Yes or no? If they didn't, then there's the problem, you know, but so many people were upset that Chris whistleblew. So he's one of the whistleblowing stories in the book, but it was interesting just seeing how people just attacked the whistleblower. And that is why people don't come forward, because nobody wants to experience all that.
Nobody wants to be attacked.
No.
Yeah, they're thinking, hey, this guy just has an axe to grind. He's just sour grapes. Yeah.
And then people kind of...
Did he have some sour grapes? Probably so.
Probably.
But did he do anything wrong? Probably not. He just said, wait. All of my kids are from this neighborhood. These are the rules. And if you didn't follow the rules, I'm just raising my hand to say this team didn't follow the rules. And so it was a big mess in Chicago.
It's funny how quickly the conversation can turn from, did they break the rules, to, are the rules even good rules?
Exactly. And that's what the conversation turned into. Are the rules even good rules? And I'm like, well, that's not that. We shouldn't be talking about that right now, because we're talking about this thing over here. So very interesting. It was a very interesting debate.
Yeah, he could have done the same thing. And it gave me flashbacks to playing football as a little leaguer. I go, there were some kids that tackled me that I think were probably forging their birth certificate. Yeah, for sure.
People do it all the time, right? It happens. People do it all the time. Now, are you wrong for speaking up? Or, I mean, who knows? So it's debatable.
Thanks so much. A final question for you. What would you say is your top decision-making tip for business owners?
Ooh. Oh, I don't have a top one because there's so many. I think making sure that trust does not become how you govern. Familiarity becomes sometimes why we say, oh, I don't need to follow this policy. I don't need to follow this practice because I know them, or I know their cousin, or their. Don't ever let that become the way you manage your business. That would be my first thing. Be careful who you hire, and just remember that your colleagues, your employees are not your family, because you manage your family very different than you manage someone that works for you or works with you. And I think when we start blurring the lines and calling them family, that allows us to relax some of the rules that we should have around people.
Yeah, that's good. That makes sense. Thanks for being here, Kelly. I learned a lot. I enjoyed your stories, and I'm motivated, hopefully the audience is too, to put some of these controls in place.
Yeah.
How can people get a hold of you if they want to follow the work you're doing?
So I'm always on LinkedIn. I have a website. You can reach out to me there. It's just my name, kellyrichamondpope.com. And I'm on LinkedIn by my name, Kelly Richmond Pope. And then, those are probably the easiest ways.
Perfect. Thank you.
Thank you.
My takeaway from talking with Kelly is about looking at how we use heuristics in our tendency to either investigate a question or not investigate a question. We look at somebody and say, oh, they would never do anything wrong, or I trust them, or they've been here 30 years. They know what they're doing. And we use that as ways to stop action, because I think our tendency when it comes to fraud, we don't want to believe it's happening. We don't want to believe something dishonest is going on. And so our tendency, our default is to not investigate. So we look for excuses that give us reasons to put concerns at rest and to just press through. That was what I got from our discussion with her.
I had a client who was doing a private transaction with a family member, and it was kind of like a rent to own of the family home situation. And I told them, draw up a contract as if you didn't know each other before this. And they were like, oh, that's awkward. We're family. We trust each other. And my advice was, do it as if you don't know each other. That way you do not have to rely on trust. There's no ability to mistrust. There's no ability for abuse. There's no ability for misunderstanding. It's not because you don't trust them. It's because you value the relationship so much that you want to create an environment where it's impossible for you to have a disagreement or anything at all that would hurt that trust. And that's what I got away from our conversation with Kelly is, even if you have an amazing company culture, you trust everybody, and that nobody on your team would ever do anything wrong. Putting these policies in place aren't there only to prevent people from doing wrong, but they're there to protect the already established trust, because there's no way that you could even suspect someone of doing wrong because the rules are so strict.
You just made a great decision to listen to this episode of Decidedly. Make another great decision by subscribing to the show and leaving us a 5-star review wherever you're listening. We appreciate the support. It helps business owners like you find our community and defeat bad decision-making in their own lives. For more decision-making insights, check us out at decidedlypodcast.com, on Instagram at decidedlypodcast, or grab a copy of Sanger and Sean's books from the links in the show notes. Finally, we'd like to thank Shelby Peterson of Transcend Media for editing and post-production of the show. Thanks for listening. I'm Morgan, your producer, and this is Decidedly.